Hey, Eric here from 5minuteinvesting.com, and today we're going to talk about leverage, if you should use leverage on risky stocks, and what does it mean if you use leverage and when you should use it, and so on and so forth. So before we start, remember to check out the description because I usually attach a bunch of free stuff, related video, and so right now we have a free technical analysis course. So if you're not familiar with technical analysis, you can definitely take that. You just gotta click the link below. So let's get started. Should you use leverage? When should you use it? And how does that impact your investing return? So before I answer this question, it is important to know where I'm coming from. Now, when I first started investing, I actually didn't invest in stocks because I thought it was too slow and I wanted something faster. So I chose a market called a foreign exchange, which is Forex in short. And they offer you an insane amount of leverage. So I put $500 in when I was still in high school, and within 1 month, I lost it all. I lost the entire account, and I was devastated. And thinking back to when I first started, I definitely over-leveraged. So when you use too much leverage, it's like you're running a company, you use too much debt, and the interest expense, the interest you have to pay will kill you. So that's why you don't want to use too much leverage, and most people shy away from using leverage. But when you're thinking about it, we use leverage all the time. If you go out and buy a house today, chances are you're going to get a mortgage. That's leverage. And chances are you only put 10% to 20% down. And that means you're getting 80% as your loan. So that means you are getting 80% leveraged. So that's quite a bit. And yet we do it every day. For example, you buy a car. Chances are you're not going to pay 100% cash to buy the car. So then you're going to get a lease. And again, that is leverage. Now, that might be span over many months, but you're paying interest on it, and you're getting you're putting 10% down or no 0% down because it's really popular now, and you're just paying monthly interest and monthly principal payments. Again, leverage, almost 100%. So how come you wouldn't use leverage in the stock market? It's because most people think the stock market is risky. For example, like a junior mining stock. A junior mining stock has no revenue, it has no proven history. You don't know if they're going to find gold or not, or copper or not, or zinc or not. And if you use leverage on something so risky, you're definitely going to be making a bad move. I wanted to say, making a bad move, a toned down version of it. But it's a really bad move. So when you look at the spectrum, how come we're comfortable with using leverage on a house and we're not comfortable with using leverage on a stock? It's because house is a long-term uptrend, it's stable, it's predictable, you get rents from it, and a junior mining stock is risky. There's no revenue and so on. So if you use leverage on a very risky stock, chances are you'll blow your account like I did when I first started investing. So if you want to have a high investing return, which is how I invest, I would find really safe stocks and then I'll use leverage on it. And that's how I make money. Now, of course, you can be a day trader and you can find stocks that get pumped and dumped, and then you try to ride the momentum and capture these small movements. But in terms of a long-term investing approach, I find that it is best to find stable, growing stocks that are big, like Starbucks, like Netflix, like Lululemon, like Southwest, that I know grows year after year, that is better than the market. I do my research, and then use leverage on it. And the best thing, I don't need to go to the bank to get a loan. I don't need it to be approved by the bank. I don't need to fill in any paperwork. Maybe initially when I set up my investing account, because in the markets, there's something called stock options. And stock options, basically, you're buying a right to purchase a share. You can do your own research, but basically, it has built-in leverage. It has built-in mortgage, which can increase your return if the market goes up. But it can also backfire. So when you're investing using leverage, you gotta really make sure that you have a very high probability of success. If you use the leverage to invest in something that has very low probability of success, chances are you will have to fail a few times or you have to lose some money before you can make money. And that's it. Let me know if you have any questions about leverage. I'll try to answer them below. And good luck.